Ladies and gentlemen, welcome back to the channel. In today's episode, we're going to be going over why this upcoming week the markets are about to move big and why this week could mark the ending of this crash that we've experienced recently. The fact of the matter is, stocks like Oracle and CoreWeave are down well over 30% from all-time highs. But that's nothing compared to small cap AI down routinely 50 to 60% over the past 3 months. A lot of these stocks very high quality, and people, have capitulated. They've gotten margin called. Their sentiment is really in the dumps for a lot of people. And well, there's reason to believe this upcoming week is the end to the crash. It's either going to end this week or get dramatically worse. That's why I'm going to title this video, Next Week, Stock Market's going to move big, or something like that, because either way, it's going to move big. But I have my reasons to believe that things are about to get a whole lot better quickly. Now, do me a quick favor before we get into all of this key information. Hit that like button as well as subscribe to the channel if you guys want to come trade and invest with us. Come find these under the radar AI stocks. A lot of them are likely to rebound the most when hopefully this week the markets rebound. Check that link out down below in the description of today's episode. But with that said, let's get started. In broader market news, Trump is yet again reiterating, quote, "We're going to issue a dividend to our middle income people and lower income people of about $2,000, and we're going to use the remaining tariffs to lower our debt." Now, the New York Fed convened a meeting with banks over a key lending facility in money markets. Reuters reports there are worries of tighter market liquidity. So this is why you keep hearing the Fed say it's only a matter of time before they have to start buying treasuries again, have to move into a QE stance. That is because the SOFR rate has been higher than the lending rate or the federal funds rate, which is a clear sign of stress in money market environments, okay, in treasury markets. That's not great because you risk a liquidity situation. And I think the Fed meeting with banks just really highlights that there is an issue going on. And it's not going to be too long before the Fed is actually buying assets, which is QE, which should help to lower bond prices or bond yields, right? Which would actually raise bond prices by the Fed going out and purchasing bonds. So QE historically is positive, but if it happens because of some kind of liquidity event, it wouldn't be positive. So if the Fed came out like on Monday and said that they were going to start buying bonds again, or the next Fed meeting, maybe that would be seen as positive. But if something blows up in the bond market and then the Fed comes in to inject liquidity, that may not be as positive. So we'll have to see how this situation develops. Donald Trump says, quote, "I think I settled another conflict today." Donald Trump says he does not care about the Epstein files, released or not. Donald Trump says we will conduct nuclear tests like other countries. Trump says that food tariff exemptions are not competitive in the US. Trump says that China is in the process of purchasing soybeans. Trump expects soybean purchases from China before the spring. Donald Trump says he does not think that more tariff rollbacks will be necessary. The Trump administration has just dropped tariffs on dozens of food items, including beef, tomatoes, coffee, bananas, coconuts, nuts, avocados, and pineapples, to name some of the biggest ones. U.S. Trade Representative Greer says we're very close to trade deals with other Western countries. Fed Bostic says, "I want information to guide the appropriate policy, and I hope a lot of data will come in for the December meeting." And the U.S. Labor Department says it will release employment report for September on November 20th at 8:30 a.m. Fed Moran said it is very appropriate to cut interest rates in December. Now let's talk about the things that are really going to move the markets in this upcoming week and why this market is probably about to get a lot better. Like the crash we've experienced over the past 2 months or so could be coming to an end pretty soon. The big catalyst this week is really earnings. okay, across the board for two different reasons. Number one, consumer, with Walmart that reports Thursday morning, Target that reports Wednesday morning, TJX and Lowe's that report Wednesday morning as well, and Home Depot that reports Tuesday pre-market. So I don't know of a better way to get a sense of how the consumer is doing than Walmart and Target. There is no better way of judging the consumer. If something changed in the economy, if people are losing jobs left and right, blah, 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 Walmart will pick up on that. It's too interconnected to the consumer and to the economy. As simple as that. Okay. So if Walmart says that, yeah, things are kind of unchanged from prior quarters, people are not doing great in some areas, they're doing better in others, something like that, that's a coast is clear kind of signal. Now, if Walmart says there has been some clear, damage done to the economy, consumers are frequently, visiting less frequently, their orders at checkout have collapsed or something like that, that's a red flag, and Wall Street's going to pay very close attention to that. Walmart's not going to be an earnings that Wall Street doesn't care about, right? It is one of the most important earnings of this earnings season. But the second story is the AI story. The big one, obviously, being NVIDIA. For whatever reason, Wall Street, every time before NVIDIA reports earnings, people get nervous and they bring up bubble concerns and they bring up AI CapEx and all of these concerns, okay? Almost every time recently. And then what happens? NVIDIA gives you out a blowout quarter and they raise guidance and they do the typical beat and raise. And then what happens? Everyone's like, okay, AI is alive and well for the next 2 months. It's pretty typical, okay? I would say this time around, the fear is even more amplified. Now, Wall Street tends to have short-term memory loss, okay? Jensen Huang just said less than a month ago that AI demand is basically they can't keep up. That AI demand is or has increased dramatically over the last 6 months alone. That demand is picking up speed, not slowing down. Jensen Huang told us that a month ago. I doubt that has changed. Maybe it was like 3 weeks ago. I doubt that has changed since Jensen Huang told us that. Well, assuming that's correct, Jensen Huang's going to have some very bullish things to say. And he's going to push back on the bubble concerns. He's going to talk about, obviously, when you buy a chip, your return on investment is 5 to 10x. He's going to tell us the same typical shit he normally does. And Wall Street's going to get excited about AI again. Now, question then becomes, how is the economy doing? Because the fact of the matter is 80% of company earnings in aggregate in the S&P are derived from the consumer, right? From the economy. So, if the economy weakens, that's going to put downward pressure on earnings. And that's ultimately what drives stocks. If we start to get the sense that the economy is largely unchanged, sure, we went through a little bit of weakness from the government shutdown, but that's not expecting to continue. And Walmart and Target and some of those guys are going to be able to give us a little bit of a heads up on that. Mix that with NVIDIA saying AI is alive and well in a nutshell, and you're going to have a year-end rally on your hands just because of how much fear is out there and how much risk assets have sold off. Okay, whether it's Bitcoin that's down almost 30% in 2 months, or Oracle down 30% in 2 months, or CoreWeave down like 40% in 2 months, or some of your smaller cap AI stocks, a lot of which are high quality, growing at hundreds of percents a year in a hyper growth phase. Some of them trading at less than 2 times sales, for an example. Some of those stocks are likely going to recover pretty dramatically as well. Not everything is going to recover the same, okay? Rare earths, maybe nuclear, maybe some of those don't recover as quickly, because a lot of them are going to take years to start bringing in any revenue at all. And, people are going to have a little bit of PTSD after watching some of these stocks go down 60 to 80% in 2 months, okay? But generally, if you've been buying these stocks on their lows, you're probably set up for a very good next 6 weeks or so, I would say, into the end of this year. I think this week is the decisive week that turns the ship around in markets. Nvidia earnings typically are, but this time around, the fear is so high, I imagine the bar is really low. And you're in for an upside surprise this week from Nvidia, let alone other, surprises as well. We're not expecting to get too much in terms of economic data. On the 20th, so next Thursday, we are going to be getting that September jobs report. We did get the September CPI report because of the, cost of living adjustments to Social Security. So we're going to get the September jobs report. That's going to fill in a little bit of the gap, but, government shutdown didn't start until October 1st. So, that's the month that really matters. And it's still really yet to be known if we're going to get the October or, jobs report or October CPI report. But you are going to have some other data this week, a bunch of Fed speakers on Monday, New York Empire State Manufacturing Index. On Tuesday, bunch more Fed speakers, the ADP employment change weekly. So the ADP last week said that you were losing about 11,250 jobs a week in this country. So what do they say this upcoming week? That's going to be something Wall Street pays attention to. Again, the Fed is compromised at this point. It's like it doesn't even matter how bad the economic data is. The Fed is going to say, hey, we're not comfortable cutting rates. The Fed is compromised, okay? Let's just face it. So at this point, you want to see better economic data since you're already no longer pricing in a rate cut for December. You're already sitting at odds of 60% that we will pause and about 40% that we will actually cut rates. So at this point, you just want to see better than expected economic data. You just want to see the economy is doing well. And that's going to cause the, recovery in markets. On Wednesday, again, more Fed speakers, but you will also get the FOMC minutes at 2 p.m. Eastern Standard Time. FOMC minutes are backwards looking. It's basically the transcript from the Fed meeting that takes place the 2 days, the day before and the day of Jerome Powell, okay? And the conference, he gets on the podium, and Powell really helped destroy this market by throwing doubt on rate cuts to begin with. It's backwards looking information. It's not telling you anything new, so I wouldn't expect it to move the markets. Now on Thursday, Philly Fed Manufacturing Index, Philly Fed Business Conditions, CapEx, Employment, New Orders, and Prices Paid. Again, more Fed speakers, the Kansas Fed Composite Index, Manufacturing Index, and existing home sales for October. And then we'll see initial jobless claims. They're really starting to stack up here. We'll see if we start to get some of those or not. And then on Friday, again, bunch more Fed speakers. S&P Global Composite PMI, Manufacturing PMI, and Services PMI for November. And then your Michigan Consumer Sentiment final numbers for November. That's a very political data set, so I wouldn't expect that to, do much for markets, right? We kind of brush that off these days because it is such a small sample size of only like 200 people, and it's like 80% Democrat respondents. So, doesn't mean much. And again, to the point here of fear in this market, the CNN Fear and Greed Index is sitting at 22. You're in extreme fear, okay? I've kind of referred this market to a rubber band, okay? It's not gonna take a lot to get this rubber band to, slingshot back together at this point. Okay, you've stretched this thing so damn far in terms of, the bearish sentiment. So you could see that CNN Fear and Greed Index coming in at 22. Market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility is neutral, safe haven demand, extreme fear, junk bond demand in extreme fear as well. The AI investor sentiment survey, same thing. Bearish investors coming in at 49.1%, which is crazy. Neutral investors at 19.2% and bullish investors at 31.6%. So, people are not bullish at all in this market. Like, I think a lot of people have capitulated. I think a lot of people have gotten margin called. And I think a lot of people are just at this point sitting out this market. And normally when you get to the point of capitulation, that is when things start to rebound, okay? At this point, it's going to be very hard to become even more fearful here, okay? Like, it's hard to explain this outside of, like, DRUG use. You got to keep, like, taking shots, if you will, if you're at a bar to keep getting, like, drunker and drunker and drunker. Inevitably, if you stop, you're going to start to, sober up a bit, right? Think about that in terms of the markets, right? If taking shots, blah, 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 think about you're getting more and more and more and more fearful, okay? Once you start to stop, once the fear slows down, you start to, like, come back to, wait, this isn't as bad as I thought, right? This isn't as bad as expected. So in markets, the fear has to kind of compound on top of itself to continue to get Wall Street to get more and more fearful, okay? At this point, you've already compounded so much fear. People are already so bearish. They're already so lightly positioned in this market. It's not going to take a lot of good news to get this market to snap back to more of, normalcy. And I would think that would happen this week with NVIDIA earnings, just alone. If it doesn't, if NVIDIA were to somehow, Jensen Huang, like, seen a change in the last 3 weeks since he did his last speech, like, that would be a bit shocking to me, and that would be very unexpected. So I think NVIDIA earnings mixed with the other things we've talked about in today's episode are key catalysts in this upcoming week that will cause markets to rebound a bit. Now, the percent of stocks trading above their 50-day moving average sitting at about 38.77%. So basically you have 62% of stocks trading below their 50-day moving average. Basically just telling you this market's not in a great place. Like, at correct, like, crash, like, levels, right? You can see this at like 20%, right? At pretty extreme crashes, like back in March and April, you can see this at like 10%, 5%, 10% is pretty extreme. Like, that'd be what, like 90% of stocks trading below their 50-day moving average. But during more corrections or more typical crashes, slow bleeds lower, like 2022, you were hitting like 20 at some of your lowest points. Some of the more, normal levels of 2022 were in the 30s. So you're back to more of like a, this market just sucks kind of moment. Not like you're full-blown crashed, but this market just sucks kind of a point. Does that make sense? Hopefully that makes some sense. So yeah, let me know your thoughts on this down below in the comment section. I will also be watching crypto like Bitcoin over this weekend to get a little bit of a sense of what to expect to at least start this upcoming week. Bitcoin, just in the time of recording this video, has recovered about $600 or so. So that looks good. But if we can get a little bit of a crypto rally going into this upcoming week, it's going to tell you a little bit more of maybe how stocks are feeling for this week. Ladies and gentlemen, that is it for today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. We have another big update coming later on today, so stay tuned to the channel for that one. Check the link out down below in the description of today's episode if you guys want to come join the trading community, all of that good stuff. You know the deal. The links are down below in the description of today's episode. Have a great rest of your day and a great weekend, and I will see you in the next one.